Welcome to TradeGuide.com. This is John. This reports for the 2nd of July. Well, yesterday we just pretty much went nowhere, and that's probably going to continue to be the case here until we get past the 4th. You get the Iranians are jawboning. They're supposed to have their big funeral for Khomeini on the 9th, so they're going to be pretty calm and just saying ridiculous things, and then the U.S. is kind of ignoring them. So everyone's pretending to play nice, but oil's moving, and that's all that matters. And that means the market's got to focus on other things. And when it starts to look at other things, well, it gets a little sketchier. So when you look at the NASDAQ, you can see not as strong as what we're seeing from the S&P. So the S&P held it up, but we already saw this with the DOC here with orange crossing above green. That's your first weakness potential unless you've got your strong magenta rising, and in this particular case it just kind of flattened out to nothing, and so you're basically holding on to the minimum you can. Now if you get this to pivot below a magenta on the MBI below the 25 where you're at, and that's a real problem because then the NASDAQ will drag the S&P down. So keep an eye out for that one. Shake out, look at that, it's just blah. We're not really doing anything. We're slightly positive, but it has to stay positive now, because once you get to the plus side, if you don't continue to increase, it gets messy fast. So we'll keep an eye out. Positive side on oil, just slowly ebbing lower, simply because there's more supply than there had been, and we haven't seen any disruptions over the last several days. So, hey, from that standpoint, we'll start to look at inventory numbers that come through. They're gonna always be on the downside simply because everybody's used up their supply. So whatever gets delivered is immediately going to be absorbed. The question is how long before that stabilizes and starts to tick to the upside. You get an even deeper decline. I think that the U.S. is going to set strategic reserve, fill back, because you remember they didn't trade money for it; they just traded a future refilling state. So it's going to behoove some companies to see a decline in oil prices in order to use that quantity to then pay back and collect the spread that they earn. So that's a huge windfall if played correctly. It depends on what the timing structure on those deals was. The euro, again, it's bad news generally, but they still believe that the U.S. economy is in implosion, and they're just moments away from, returning back to prominence. Yeah, that's going to happen. Gold, basing at least from that viewpoint, and again, everyone's still going to be waiting for the food inflation and those numbers to start coming in later. And Bitcoin, obviously, same problem, breaking up to new lows continually. For the first time, though, getting close to an actual quantifiable buy signal there. So, but not even close to the 23%. That shows the desperation built into that setup. So then we had the 50K, made new highs, then faded it back. So this is all just comfortable, just nice and clean intraday wise. Makes it very easy to trade. No objections to it whatsoever. I mean, we have these soft declines, and then you get these nice run ups, very easy to follow, and followed by pretty steady decay. And that's all clean. Now we had a little bit of back and forth Asian session and European session now starting to catch a little bit of juice. All clean. Nice way to start out the month. Everybody's repositioning and getting ready for the holiday, and then after that, we'll start to have a better idea of things. But all good. So anything relevant, I will certainly put on the team chat. But it's all happy-go-lucky at this particular stage. Trade well. Have a good one.